Hey guys, hope you guys had a good trading day today. If you're one of those people that thought we were about to get that big old June sell-off right here that we're looking at, well, you were severely disappointed today. If you were also one of those people that thought we were going to immediately bounce and gap fill, you also were left disappointed today. Pretty much everybody was left disappointed today. Besides this morning breakout move right here and this little dump right here, we pretty much spent all day trading between 412.5 and 413.4 roughly. So we pretty much spent all day, but maybe an hour and a half. So trading within the same dollar range. It was a very, very long day of nothing. So what did we learn? Well, overall, I drew this red channel, so we're still obviously trading there. We're going to zoom in here. So the most important thing that I want to point out, like I was just saying, is this is not a July sell-off. And I basically said that it wasn't going to be yesterday just because we don't have the catalyst that we had. This was related to CPI. So this was an abnormal dump. It was a dump basically because the market got caught like sleeping, essentially. So where are we now then? Well, we traded at that 413 level. We couldn't close over it. I really kind of thought we might close a little closer up to here, like 413.4, 413.5, but in the end, we ended up closing down a little lower than I kind of anticipated or would like to. However, we did this morning, we tested that 415 level, which is the daily 20 EMA right here. It was a pretty hard rejection, as you can see. I mean, we went up, we pretty much touched it, and then we immediately dumped, and we never once after that saw it again. So that is a pretty, like, overall bearish move. The one bullish move I would say, though, is that we did wick over it. So usually, once you wick over an EMA, like kind of like we closed over this one, it's usually a sign of what's to come. So like if you look here on August 9th, we hit the ADMA perfectly, but we didn't wick below it. We just hit it and then we bounced, and we bounced. So usually if you don't wick through it, you usually will bounce off of it. So, but if you wick through it, then you usually are going to go through it the next day. So that's something to keep an eye on for sure, this 415.3 level right here. As you can see, it was a nice resistance. So kind of what we ended up doing here is we were up in this area, and now we've kind of broken down, and it looks like we're trading in this 407.5 to 415.2 range that we spent 1, 2, 3, 4, 5, 6, 7, 8 trading days in before we had CPI that popped us up. So the gap is filled now. So we're almost really just continuing this consolidation from pre-CPI right here. Important things to watch tomorrow is this black resistance line right here, which is basically the start of whatever bigger sell-off that we had. Like you see, we have the blue sell-off right here, which this is, in my opinion, possible top but this is the aggressive sell-off. So that resistance tomorrow is going to be at 415.3, that key level. I do suspect that we will test that, and I do suspect that it will break through that. From there, where we go, I'm not quite sure yet. 417.5 would be a big level to get through. That is that daily level, and the 200 EMA is right here at 418. So currently where we close, we're only 2.15% away from the gap fill at 421.22. So it's possible that we're going to just see a green open, either over 413, or we'll just open right where we closed at, and then we're going to see a big push up here, and we could just go straight for this 422 gap, or 421.2 gap fill. Most likely what I think is going to happen is we're going to break this resistance, and then we're going to close somewhere up here in like 418 to probably 420, and then the next day on Thursday is when we'll fill the gap, and then we'll end up somewhere up here, and then that kind of gives us to Friday. So Friday is interesting because that's that Jackson Hole speech from Jay Powell, where basically the market's going to do whatever, or he's going to talk about the market, and essentially what's going to happen is he's going to say a bunch of bearish stuff that we already know, but then the market's going to be like, oh no, we never knew that actually, and then we're going to finally see the sell-off. And then that's pretty much going to take us into CPI. That'll be Friday. And then the next CPI is on September 13th. There's no like prediction just yet for that, so that'll be the next big thing. And then we have PCE on Friday too. So overall, I think Friday is going to be a pretty bearish day, and I think next week will be bearish too. So those are kind of the key things to watch for a bullish move. Now, support wise, if we were to break through 411.3, then I am going to be looking for us to kind of come down here. The main level that I want to watch is still that 407.5. Once we break through 407.5, I'm under the suspicion that we are in a sell-off. How aggressive it is, I don't know, but I do think we're going to be in the next leg down. So those are the main levels I'm watching. SPY weekly, not a lot going on here. We are holding that 412.45 level right at it. So that's that weekly level that I was telling you guys about. You can see where the candles are all hitting it here. So that's an idea to keep on. 410.7 is the 20 and the 8 weekly EMAs. That should be nice support if we do get down to that level, and I really don't think we'll break through that. But if we do really dump down, then 404.5 is about as low as I think we'll go, which is the 100 EMA. I would suspect us to bounce there. And then we still have our gap fill up here. So futures, this is basically the similar aggressive sell-off line that I was just showing you right here on SPY, which you can see futures has already popped through it, which I'm not surprised. Futures put in a nice base at 4120, which I kind of suspected would be pretty big support. I'm going to be watching to see if 4120 overnight is retested or if we just continue a nice green trend. This 4158 right here, which is the daily 20 EMA for futures, is going to be very key to get back over. One bearish thing that is happening right here is the 8 EMA is crossing back under the 200 EMA, and the 8 EMA usually leads the trend. So the bulls really need to get this back up here and get that back over the 200 EMA in the next couple of days. Otherwise, I do think a bigger sell-off is coming. So now that we broke through this resistance line right here, I do still favor upside. My target's going to be like 4184, possibly 4200, 4210 tomorrow. But this will be Thursday, or this will be today, Wednesday, Thursday, Friday. So by Friday, we could test this 4224, 4225, or on Thursday, we could test 4233, which is the actual sell-offs that started back on the 16th, and kind of see where we're going trend-wise. So futures, we are below that trading level. So this is also where it kind of gets interesting. So I was talking about on SPY, I think yesterday, that identifying the actual level right here is kind of tough because we've just had so much different trading that's happened right here. So there is one level like right here where you could call it 4125, 4130 as the bottom of the support. You could move it up a little bit and be closer to like 4136, or you keep it right here at 4150. So I will probably adjust this trend line right here after this week is finished. I don't want to just keep moving as the week's going, but that is something to keep an eye on. But we did see a bounce right here off 4118 for the weekly 8 and 20 EMA. So I don't really suspect us to go much below 4110. 41, yeah. I'd be really surprised to see us break through 4110, 4100 at the minimum. So looking at Apple, I talked about this on, I guess I didn't actually mention it, but on SPY Daily, we had this gravestone candle right here. Usually a gravestone doji, when we're in a downtrend, like we are right here, is actually considered a bottom. So I don't know like why the price action does that, but just watching trends over time, I've learned that when the doji, kind of like here, is at the bottom of a dump, it actually is like a pivot point upwards. It's not usually a continuation. Usually to see a continuation of a sell-off, you want to see a dragonfly doji like this, where it's upper, not lower on the candle body. So on SPY, like you kind of have another doji right here and then it pops. So this was CPI, so it kind of throws it off a little bit. But you can kind of see the same thing here. We had this nice drop of the dragonfly and then we popped up. It was an inside day, but we did pop. So this is kind of what we could be looking for right here tomorrow too. Kind of like a nice inside day up in here, this 415 to 412 level. But on Apple, it's more important. Apple has a better history of doing that. So if you look at these doji candles, we had a little dump, a doji, gravestone doji, and then we had a big run up. And then we had a gravestone doji and then a big run up. Then we had a regular doji and a big run up. So I've seen a lot more with Apple. Apple's kind of in no man's land right here. This 166.5 to 167.6, really, there just isn't a lot of trading here. We had CPI right here that gapped us over that, and then here we had 2 wicks, and then a wick down, and then a wick down. But this is our first candle that has closed in there since back in April. So that's not a lot of trading action. And even here, we had like 1 candle right here that closed. But other than that, everything is just kind of either wicked through it or been through it. So there's not a lot of price action to really give a good support and resistance here. So we're kind of are in no man's land. But major support I want to keep an eye on for tomorrow is going to be right here at 166.5, and the major resistance is 166.6. So I will be watching those closely. If we break through 166.6, I do think we're going to try to go back up here to 169.8. And then even maybe test this resistance line, which this would be the similar one that SPY has at 170.6. So 170.6 from close, let's just see here, let's do a quick calculation to see where that's at. Would be a 2% green day, so that's not much, and that'd be about a half gap fill, and then the next day you could suspect that we're going to probably go up to like 173 or something like that. So that's kind of what I'm going to definitely be keeping an eye on. Just scrolling through my thing here. So another thing to keep in mind though is that we are closing in on the CPI gap. We're only 0.9% from filling that gap, which is filled at 165.82. So that is something I'm keeping an eye on, as we could see a bounce down to like 164.9 and then go up. Since SPY did fill its gap, which is the same gap that we just filled yesterday, but Apple never filled theirs. Overall, Apple is really moving, I would say, I guess the best way to put it, like in a small manner compared to SPY. Like its candles don't look small, but like it actually is kind of moving small when you compare the movement that SPY has had. Like today, I mean, today and Apple and SPY had a pretty similar day, but like yesterday, the overall movement on only 2.3% day when SPY had a 2.8% day. Or 2.08% day. We should have seen Apple move more closer to like 3 or 4%. So just something I've been watching. It's almost like the Apple trend is just smaller and condensed. So now we're just kind of figuring out which gap we're going to go fill. If we do fill this lower gap and we continue through 164.9, it'd be pretty safe to say that they're going to be shooting for this 157.6 gap fill, and I actually probably would play that if we close a candle below 165. I probably would play some Apple puts, some short-term ones, to say that we're going to see a sell-off. But I'll be watching this resistance line here. If this is broken, then that's definitely going to be a bearish thing, or a bullish move that's happening. Same thing with the weekly here. This 166.4 level is just a pretty key support level to watch, so we'll just keep an eye on that. The VIX. So I mentioned the gap yesterday, that we don't really leave gaps for too long on the VIX. I mean, we had this one gap right here, and that was filled in 2 days. And then let's see, that's a small gap that we filled late. I mean, I'm talking, let's see, upside gaps. Besides that, upside gap wise, there really isn't any that I can see just relatively quick here on the chart. There's this upside gap from November. That one did take a while to fill, but you can see this was an incredibly extreme move from, we opened at, or closed at 18.57 and opened at 26. So that was a little bit of a different extreme. But other than that, our upside gap moves are all pretty much covered within a couple days. This one, too, is 1-2 days. So this is back in 2021 here. You see 1-2 days. So this was like 4 days. But overall, the message is that the gaps don't stay very long on the VIX. So the one thing I'm watching, I mentioned this level yesterday, was at 24.2, where we've seen a lot of price action just kind of going down, and we haven't seen a lot of candles want to break through and close over that. And we also have another similar doji, or it's kind of like a hanging man, but I would like to see a longer body to be a true hanging man. So it's kind of is like, I guess, a dragonfly doji. But when you see those, it usually means the next day we're going to see kind of a sell-off. You can see the trend here with those doji and sell-off, doji sell-off. So I'm not really sure where we're going to go with the VIX, but this is one of those times where you should keep an eye on the VIX. If the VIX is continuing to rise through 24.2 and we're getting closer to 25 and breaking this channel that we have now, then I would be more concerned that a sell-off is definitely coming and that they're preparing somewhere for some bad news that either we don't know about yet, or they're just preparing for the Jackson Hole to be terrible, and then we're basically starting the next sell-off. However, if we see this kind of settled down tomorrow and back to like 23 like it was trying to get through, or even back down to like 22, 21, then I do favor still that we're going to go and fill the weekly and daily gaps above, and then we're going to see the sell-off start probably on Friday. So my plan right now is I do have some calls that I'm holding. They're pretty red right now, but I'm holding some calls. They're just 3 DTE. It's a super small position. I opened this morning when we broke through the 412 level or 414 level. I was really anticipating that we were going to continue to run pretty good and that we were going to go up today and then maybe trade up close to like 417, 418, but obviously that didn't happen. But my expectation is that we come up here tomorrow, probably close over by 418, and then we're going to try to fill that gap on Thursday. So Jackson Hole's on Friday, which is that like Fed meeting. My goal, if we do see a move up here on tomorrow and then Thursday for sure, would be to open some puts, like 30 DTE probably, on Thursday and then ride those down. I do think that we're going to see a red week come next week, so we'll probably end up somewhere around this like 399 to 388 level next week is my guess, if they make the Jackson Hole to be what they're kind of building it up to be. So Bitcoin, watching this closely here, I mentioned that 21.5 level was super key. We were just still trading right at it. Today we had a big, big moves up and down, and we're just stuck in this basically 20.8 to 21.5 level. So if we start seeing Bitcoin start coming up here, especially if it breaks like 21.7, and definitely if it breaks 22, then that's really bullish for SPY, and I will be trading off of that, and I will believe more in the gap fill coming tomorrow. So, all right, guys, I hope you guys enjoyed this video, and I will see you guys tomorrow. Thank you for tuning into this video. If you like the video, go ahead and like and follow me just to support the page. I provided my Discord link here. This is the lifetime link, so sometimes there's issues with this. If you have any issues, just go ahead and send me a message and I'll get you a temporary link that'll work. Some benefits of the Discord is I do a pre-market update with some key support and resistance levels to watch. Throughout the day, I'm on there doing live commentary on SPY and the general market with updates about key levels that are broken. I also do live trade alerts. Currently, it's $20 per month or $228 for the year. If you want to follow me, I'm on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh. Thank you.